Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 23rd of September. There's been a sharp dollar rally which has driven through markets in the past, well, early part of this week, really. A little bit of a kickback against that move today, nothing too significant, but this move on the dollar index through this resistance 93.50 to 94, it sort of crept back underneath 94 today, but certainly looks as though it's breaking out in the process of doing so. And I think that's a really important move because it essentially creates this base pattern that recovery targets sort of 90, this initially I suppose this 95.70 to 96 area on dollar index starts to come back into play, and that sort of equates to euro dollar breaking down below 117, cable breaking below 27.60, and dollar yen above 105.10 area. Now they're sort of trading out this today, but it certainly looks as though this market is starting to turn more dollar positive. That move is also breaking the gold price lower, sharp moves to the downside on silver as well. But interestingly enough, we've had a sharp rebound in equities. We had equity markets which fell over quite considerably late last week into early this week, but a rebound yesterday and a continuation of that those futures higher today now bring the market back towards a key moment. This, well, just even on this on the futures chart, the 55-day moving average. If the market now starts to fail under that, having previously been a basis of support, then again it sort of rolls over and you start to see this more corrective outlook developing. So how this rebound lasts and how long it lasts is going to be really important. At the moment, as I said, futures are 0.5% higher, and obviously European markets are strongly higher, but can that last is the question. So this morning we've had the flash PMIs coming out. We've had Eurozone data which has been underwhelming, it has to be said. That flash services PMI underneath 50, 47.6 has dragged that composite PMI back to basically stagnation at 50. 50 is the limit between expansion and contraction, so stagnation effectively. UK data has not been as bad, little bit of a drag back on the composite, but still 55.7, so not too bad, but certainly not the 50 that the Eurozone is seeing. And into the afternoon, we're looking out for the US data. US numbers are expected at 2:45 and expected to see manufacturing and services both sort of marginally positively, marginally expansionary, I should say. And we're also looking out for the weekly crude stocks. Now, crude stocks had a surprise inventory build yesterday on the API numbers. So it'd be interesting to see how the EIA numbers come out today. They're expected a drawdown, but yeah, that's at 3:30. So the big focus for today, as it has been, is sort of still Fed speak, really. Fed Chair Powell speaks again at 3 o'clock to the House House Select Committee. Sorry, that's wrong. House Select Committee today. But he is talking about the impact of the COVID outbreak and pandemic on the economy, really. So that would be interesting to see how that impacts on the dollar. So my chart today is Aussie yen. Now, a classic reflection of safe haven play being dragged down as the yen starts to outperform the Aussie, and it's all the trends of the recovery have now been broken, and that doesn't bode well for equity markets in their recovery. Even though equity markets have rebounded, we're still seeing Aussie yen falling away underneath old supports. So that reaction low at 75.55, that was a key level. Breaking below that, we now see this downtrend forming, lower highs, lower lows, and now 75 figure. If that's breached on a closing basis, again, that would be a significant moment. That was old resistance, became supportive through late July into August. If that gets broken, we really are starting to turn corrective, I think, towards 72.50. Look at these momentum indicators there. RSI in the low 30s now. It's the lowest since the recovery kicked off back in March. MACD lines also coming underneath neutral, and stochastics bearishly configured. Does not look positive, and you'd be sort of looking to use intraday rallies really as a chance to sell. And again, take that as you will in terms of the read through for equity markets, for example. but certainly the Aussie yen is under increasing pressure. So you'd be looking at selling around resistance levels. You've got 75.50, that area of support, old support turns new resistance, and up towards 70. Sorry, let me just get that across there. 76.10 area. So you've got 60 pips of resistance there, decent for a rebound potential, and to still be in this downtrend phase. So yeah, rallies are a chance to sell on Aussie yen. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars and click to watch Trader Talks, our videos that give you top trading ideas.